Hello, welcome to this session with a rather gimmicky title of The Protection Gap, exploring the challenges and opportunities of the digital state of play in the insurance sector. My name's Sam Shaw and I'll be your host today, and I'm delighted to be joined by 4 experts across the space. I'm here with Mark Budd, Head of Innovation at Zurich Insurance, Phil Jeans, Director of Corporate Strategy at Reassured, Phil Zeidler, Co-founder at Dead Happy, and from our host of Padme, Gary Partington, Chief Executive. Welcome to you all, gentlemen. Really, really nice to have you here today. Now, financial product providers have been criticised for using paper and faxes and all kinds of analog processes until far too recently. The pandemic, we heard all kinds of headlines about how digital strategies were accelerated from years into months and in some cases weeks in some smaller companies. And I'm just interested, Phil, from your perspective at Reassured, because I know part of your remit is to deal with all of the different life insurers. To what extent have you seen that taking place in that sector?
Yeah, I think the life insurance industry has moved on a massive amount in recent years because it was very heavily paper-based and now is almost entirely not. So that's great. However, most insurers' approach has been to take the paper application and just put it online. So not massively innovative or customer-centric. And I think, there's a big problem in utilising technology to be slicker and more personalised with customers. There's still a lot of insurance jargon and a lot of hoops for customers and brokers like us to jump through. So I guess a B+, something like that.
That's great, thank you. And Mark, how does that compare to the GI space in terms of where you've seen people sort of stepping up their digital efforts?
I think in the GI space, we've been on the digital journey for quite some time, and whether it be digitising our application forms or our claims process, I think we've been on that journey for a long time. Historically, the legacy applications that a lot of this data was hosted on was often given as a reason to slow that down. I think in the last 5 years, we've seen a lot of the core applications in GI move on to more modern platforms, which has helped. And in COVID, I think the things that maybe the last couple of things that were kind of hanging on still were things like wet signatures and payments. So through the last 18 months, we are now doing 70–80% of digital payments. All our signatures are now digital. We've moved on quite a lot in some of that last space. So yeah, there's always a bit more to do, but we've made good progress in the last 5 years. I think in the last 18 months, some of the sorts of things that made sense that we never quite got round to, we just had to do because the customer need had fundamentally changed.
Great, thank you. And Phil Zeidler, your business has been described as something of a disruptor in this space. What were some of the things that you saw that really needed, or indeed still need, disrupting?
Well, I think that a whole host of areas, as you might imagine. I think you would just think about the digital theme. We think it's really interesting. Digitalization is absolutely fundamental if you think about how certainly young people buy products. And for life insurance, millennials is the natural time when you're buying, getting a mortgage, getting married, having children. And they buy them, and it's not, and people just use digitization as a very generic term. But actually digitalization is just the start of it. So the first thing that we notice is around the ability to buy things on your mobile phone. And mobile first is a different level of digitalization. So that would be the first major area that we think is fundamental. The propositions don't just have to be done online, they have to be able to be done on your mobile phone. There's many different areas we would speak to. The simplification of the process was also a huge area, a focus for us, because we felt that in itself was preventing people accessing important product. And there are many, many things that you can do. And that we're testing and trying in order to increase the access for customers.
And just to throw that out quite broadly then, I guess maybe to Phil, from your perspective, I mean, why has it not been happening? Like, why is this only just accelerating in this space? Why is the life insurance or insurance more generally so slow to the party, late to the party?
I think, as Mark touched on, that we sometimes give them a hard time for it sounding like an excuse, but insurers do have, in some cases, if they're a big, long-standing insurer, a myriad legacy systems that they've got to bring up to speed, and that is no small job. You've also got a pretty complicated and convoluted underwriting process, more so in protection insurance than I think in any other insurance, or they might correct me on that, which means you've got an enormous level of complexity that you've got to take customers through before you can make as part of the application process. So as Phil quite rightly says, if you've got a customer starting on their phone, you can make it look quite slick to begin with, but as soon as they get into application and suddenly they're answering yes to underwriting questions, which throws up reflexive questioning around that and taking them right the way through that journey, it's a really complicated thing to do. So I think the industry is caught between two stools of refitting the product to make it fit a digital world, or keeping the product the same and trying to sort of shoehorn it into a digital process. And Phil could probably speak a bit more about how his firm are doing that, because that differs slightly to what the more mainstream insurers, for want of a better phrase, have done.
Just keen to bring Gary in at that point as well, because if it's not technology per se that's the blocker, but maybe, to Phil's point, some of these legacy systems, what have you seen? What do you see some of the biggest challenges facing this kind of sector?
I think the challenges on this sector are the same as what we've seen in others over time, is that there's an adoption curve of demand from when customers want to move more things to a tech only play. It started off with banking, then share dealing and wealth management, and you start to wonder now, the next adoption of services in this wider space. Insurance is the next one on the list, and there's a lot that are doing that, but the question mark for me is what the split is between people that end up on a like Phil said, a mobile first journey or a digital only journey. We've seen in the last 10 years the number of our clients that 10 years ago some of them had no digital, and now they're doing 92% of all of their revenue in a digital space, and 60 to 70 of that in mobile. You start to see that it across a lot of sectors, it is a pure adoption timeframe. And I think the challenges around legacy is there for all industries, and it's about when is both the internal push from the businesses and the external pull from clients. When you look at the disruption space, banking's been moved on quite a lot because of those new tech disruptors that come in and start grabbing the customer base. You look at someone like Revolut, who's spent a fortune on adoption of customers and are now valued based on the number of customers they've got, not on their revenue. You can start to see how that kind of model will translate into other sectors. But the legacy system piece is an interesting one, because that's what we see every 5-10 years, that there's always legacy, and it's how you best architect systems for the future now, because it's going to be a continuous evolvement.
Do you think, Mark, on that, do you think that, because obviously the legacy systems exist across different parts of the insurance sector, and yet, like you say, GI feels like it's a little bit further down the line on this journey. Is that because the products are simpler, or is it the underwriting process? Like, what would be your thoughts on that?
The product, there are a wide variety of products, so I don't know if it's necessarily just the products simpler. I think probably the audience was demanding it a bit quicker, if I'm totally honest. A direct play, the aggregators kind of woke people up a bit to realise they need to do a bit more digital first. I completely agree with Phil, though, that we're still dancing around the edges of what we mean by digital, and there's some digital capabilities that make the customer experience a bit easier. But once you get through those as hygiene factors, I think you start then getting into proposition and product, and the way people experience those products that is quite different to digitizing a traditional product or service.
So where would be the biggest pain points in your view then? And that like, because if you're going to prioritize, you've obviously got application, you've got underwriting, you've got claims. There will be different friction points in each of those. How do you go about prioritizing that?
It would be really easy to look at the biggest problems that we've got. So what causes us the most pain operationally in claims, or the most pain in underwriting? But we shouldn't be doing that. We should be looking at where's the most pain caused in the customer journey. So we should be saying, if the application process is heavyweight and clunky and it's not omni, we should start there, because the customer will lose customers in that process. So we should really be guided by customers and where they're experiencing the most pain, because if digital is a thing, part of digital is the experience you get through the digital process, and if it's they're not getting it, and where component parts of the process might be digital. If you're still getting pain in that process, you're going to have to iron those things out. You're going to get people dropping out in an application process or complaining in a claims process.
Sure.
Yeah, I agree with you there, Mark, because I think fundamentally the big problem that we've got in life insurance that perhaps sectors like motor don't have is customer apathy. That's our biggest threat, really, is we struggle to grow this market because it's not a compulsory cover. And as Mark says, if the first touch point they have, having been stirred to action by something that's happened, whether that's as Phil mentioned, starting a family, moving home or something, if their first interaction is a journey that's clunky and difficult to use, that's not great, and that's our biggest issue.
Yeah, I wanted to draw you on that a bit more, Phil, because like you say, those kind of natural opportunities, I guess, or those trigger points in life where you might necessarily start to think about insurance because it's not something you just actively choose to go and buy, nor is it a legal, mandate unless it's in, something like the motor space. So how do you see that evolving and getting the customer more engaged as opposed to when those natural moments aren't necessarily there at the most predictable times anymore like they used to be?
Assuming this is to this, Phil.
Sorry.
Yeah, I mean, we have a view that one of the challenges for the industry is to get people to actually understand what the product, of life insurance actually is about and what it can do. And we think that we're never going to make it the most inspiring and exciting product to buy. All insurance is a distress purchase, almost by definition. But we do think that actually life insurance as a product can do some amazing things that people don't necessarily think about. And the industry hasn't necessarily been particularly good at that, of describing it, which is why we come up with things like our Death Wish platform, to get people imagining far more broadly about some of the extraordinary things that they can do. But then there's the other side, which again we have a very different tone of voice. I'm not entirely sure why. But traditionally, almost all insurance, and certainly life insurance, is very dry, relatively morbid. People aren't actually dying when they buy this stuff. They want to be engaged and they want to be, entertained, if you will. And so hence we absolutely have a strategy about trying to create engaging content, use of humor, which is very useful for difficult topics. And there's a lot of humor in death, whichever way you look at it, and actually try and apply that so that people are more happy and interested to engage with the business rather than just see it as an entirely forbidding task that has to be done. So that's I guess how we see the approach of drawing this this very substantial group of people who effectively have an unmet need.
Gary, have you got any thoughts on that, just as as an external view on the sector, where you have got these grudge purchases that people are quite reticent to actively buy, and some of the ways that we might be able to get over that? Because I'm just thinking, for example, digital could be used to anonymize some of those conversations that some people would be more comfortable with, whereas other people might feel more at ease speaking to a trusted human being that they have an ongoing relationship with. Just keen for your thoughts.
Yeah, and I think some of the things that we're seeing in other sectors where there's a push towards deeper integration with other apps that might have a closer match with a particular target demographic, so that when the right life event occurs, the messaging is there in their face, if you like, that they recognize that they've just either had a child, bought a house, or done something else, and whether it's a wealth management solution or whether it's an insurance product, that they can then start to integrate. And for me, that's where somebody along the lines of a Revolut or a Monzo that's their next generation of revenue gains, where they're going to see how they can then integrate with the data they have to recommend things for people's life stages. And I think there's a big potential upside there to attract people at the right time. And how you can partner with somebody like that is really interesting. In different solutions that we see, that whole data personalization of the experience, not necessarily in an insurance only app, but as part of a life journey that somebody goes on, I can see many of these things becoming really embedded services that makes it really easy for people to take. You can see that when you solve a problem, so the day insurance type solutions for cars, where it's maybe not as seen as much of a distressed purchase, but as a need purchase, they're predominantly mobile first now because it needs to be quick, easy, and you want to do it multiple times.
Mhm.
And that's where in my mind I wonder about when will insurance catch up with where some people want to be with, travel insurance is virtually a lot of the times is done inside a mobile solution now if you're using something that manages all of that, whether it's a travel company's app or somebody else's. And it makes you wonder, is that the reason why the adoption is maybe the slowest in some of these spaces, because it is only a once a year engagement,
Mm.
where it's not, that barrier is, it's not big enough to cause massive problems, but it will be in time because nobody will want to be doing things in that, how many times doing when you fill in confused.com over and over again and it forgets all your information. Those are just frustration points. If somebody nails that properly, there's a big space to go after.
Mark, do you think that, and do you think that's why or do you expect that we will see the rise of things like embedded finance and insurance as a service type partnerships forged between brands, maybe, so you're more sort of in the right mindset for making the product purchase?
I think we probably will see insurance as a service becoming more prominent. There is a bit of a downside of that for the insurer, and the insurer won't like that because they effectively become a commodity. Because you don't know what label you're getting, you don't really know what you're buying. You just tick a box at the time of purchase, and then it becomes a race to zero because it'll be he who's cheapest wins. So I can see why the consumer would want that. It's difficult for the insurer to want to play in that game. I think we'll probably see a bit of two phases in that, where there's a bit of a race to zero to start with, and then actually the value of what you've bought is at the point of claim. So people won't be judged on price; they'll probably be judged on the claims experience, because that's the only thing you can truly differentiate on. Otherwise, everyone's going to be quibbling over pence. The other thing I thought was interesting is I think insurance is one of those things, one of the few things in life that we buy that we hope we never use. And I think the more we can create holistic propositions where there is a service, preventative service, or an adjacent service that sits alongside the insurance, that will perhaps be the bit where you get the engagement and the real satisfaction from, and the insurance is just a backstop as part of a broader proposition. We see that as a very real outcome. We're doing that in GI. I mean, the Vitality model is pretty well known. In cars, we've been putting black boxes in cars for a long time. To start with, we only put them in bad drivers' cars, but now people are electing to do it because they can see the upside of the rewards or whatever comes with the black box. So I think over time, those propositions will evolve to something that people engage with something they can use in the event of a real problem, which we would call as insurance event.
And especially, I guess, with the rise of wearables, Internet of Things, that model will apply across sort of all facets of life, I guess. Phil, Jean, can I bring you in there? Because obviously Reassured is direct to consumer, but also not so long ago launched an advice arm as well. So where do some of these arguments sit in a D2C model versus an advice model? Where are some of the nuances there?
Look, the problems are pretty similar. Most of the customers that transact with us do so over the phone, and if you look at the market as a whole, that makes up an enormous chunk. So we might be the biggest in the market, but there are plenty of others. The vast majority of life insurance sales start online, so it starts with a Google search in its simplest form, or with one of the aggregators, and ends up on the phone. So that tells you two things. There's a lot of demand for online, but the solution isn't good enough, and therefore they end up offline with us or one of our competitors. To Mark's point around making it more engaging online, I do think there's merit in that, because especially over the last couple of years, we've seen the use in what the industry terms added value services, for want of a less clunky title. We've seen the use of those go through the roof. So I guess from our point of view as a broker, we might have seen those add-ons to life insurance as peripheral, and maybe something that, particularly in our non-advised arm, we wouldn't necessarily even raise with customers. as now being something that actually can A, cement a sale, and B, help us keep policies on the books, because one of the most popular ones is a virtual GP service, which over the last couple of years has really come to the fore and is seeing enormous amount of use, because people are struggling to see their actual GP and may not even want to go and see their actual GP. So I think once the genie's out of the bottle with those things, even if we ever get back to a point where we do get back to normal, a lot of customers will recognize that and want to carry on using it because they had a good experience. So I think if we can challenge the insurers to incorporate those things into their products without making it, 15 different apps that you've got to download, then that's a really positive step. If actually you've got to go here to get your policy documents, there to engage with your GP, here to connect your Fitbit and all these other things, then it just becomes another clunky service that we've missed the opportunity on.
And personalization isn't just about the sort of the buying experience, is it? Because I know, Phil Zeidler, obviously you've got personalized policies, because we're very aware, I know we've spoken before about this, that people's lives do change, their circumstances change. So to have a policy that's in place for decades at fixed prices just seems really quite not fit for purpose. And I understand that that was kind of part of your thinking when you launched Dead Happy in the first place, wasn't it?
Yeah, absolutely. And it's very relevant to the points you just talked about, engagement with the customer. What's the incentive for a customer to engage with you as with a product provider if you're told, by the way, you can't change your product? You can't increase your cover, you can't decrease your cover, you can't change your price. Or if you can, you've got to cancel it. And it's something that I'm still, as someone who has a GI background, so very used to dealing with all of the sort of, be it health, motor, you name it, every other type of insurance is a normal expectation. I think most customers expect to be able to adjust their product to meet their needs. And it's one of those curious elements of life insurance I don't understand, and I think does need to change. From the customer's perspective, it can't be right. I mean, it is relevant, and I'm very well aware that it's a major change for those legacy systems and for all those insurers, without any perceived value. But I think that comes back to the point that Mark made exactly earlier on, which is all too often the focus on tech changes is around what's good, in terms of the supply chain, but not necessarily on what's good for the customer.
Mm-hmm. Great. Okay, Mark, anything to add to that?
No, not particularly. I mean, I just agree. I do think that the engagement thing will become increasingly popular as the digital generation is more prominent. They would expect some of these experiences as standard, and paper and a transaction experience and a dull experience with no flexibility in it will just become out of date.
Is there an opportunity, because we've talked about kind of like buying points that might have been attached to a life stage, but now it might be an annual review, there might be a reason that you might think to re-engage. Are there opportunities for data to be used for that to happen? Maybe it's like nudging type moments and things like that might somehow be hitting them at the right time. Phil, have you got any thoughts around that?
Yeah, I mean, it's very much on our agenda. So as a broker of some scale, we're gonna go down that path ourselves. So I think historically, and I've been knocking about in this industry for a decade or two, and for a lot of that time, brokers have been asking insurers to do things like annual statements. So a uniform statement that pretty much every life insurer has a version of, but it's a standardized template, and it shows the customer, here's what you've got, here's potentially where your gaps are. So a bit like your annual pension statement that says this is what you're planning to get at retirement. If you want to increase your contributions, this is what might happen, and so on. So the impetus for that is to do exactly as Phil described, which is to keep that customer engaged. Commercially, clearly an opportunity to increase your sales to that customer, but from a customer perspective, they get more embedded value from it. And it does give you then a chance to remind them about those added value services that perhaps they haven't used, or you can see that they've engaged with some and not others. So I think there's a massive opportunity to do that. Probably rather than wait for insurers to do it, I think, as I say, brokers of scale like ReAssured will probably go down that route ourselves and say, look, we'll design our own customer portal and our own customer interaction, and we'll have a standardized template that says, here's what you bought, Sam, and if you want to review that, here we are.
And what about the role of comparison sites? And I'm thinking about people like the data providers, the experience, and people like that have access to all of this. To Mark's point, if it's not just about being a race to zero, which is ultimately what a lot of these policies are bought on, is on price, where do you see, will they become even more of a competitor, or how will you, Mark, Bud, how do you see the role of the insurer sort of solidifying its brand and things like that in that?
Is the question, if the question is, do I think aggregators will be around and stay relevant? Absolutely. The aggregators, so on the insurance spectrum, the aggregators play a really important role in the personal line space. I think what's kind of interesting on aggregators is that they compare on commonality when we all assume the market's crying out for differentiation. I think that's just quite an interesting observation, which is hard. So I wonder what happens to the 50% that don't want to compare on just price alone, where I think there's a potential gap in the market there. But when you get into some of the larger complex risks in GI, moving to SME and mid-market and large corporate, the aggregators, there's no real play for the aggregators there. So I don't think they are as disruptive in that space. I think the competition in that space is more about the insurers and their proposition. And I think it's their claims proposition. I do think it's the services that come with it.
And Mark, I could probably answer your question there in terms of life insurance. If they start on an aggregator, where do they end up? If they want to do something other than just compare on commonality, they end up on the phone, either with us or a competitor, because they want to speak to someone and say, look, I can see I can get some prices here, but what does this mean? What is that extra bit of cover? So I think you're absolutely right. Until we make that buying purchase more personalized and more flexible, you're still going to end up with 90+% of sales ending up on the phone, even if 100% start digitally.
Yeah, I think for those really low-level risks, in the most simple cases, the aggregator, maybe that does make sense. But anything that goes slightly off-piste immediately requires a different conversation. And at the moment, you're right, it's a conversation, and there surely are better ways of dealing with that.
Definitely.
Do you think, Phil Zeidler, because your proposition is so focused, is that why it is able to be so sort of digital centric without the need for a big sort of telephone support, because it is just focusing quite tightly?
Yeah, I mean, I think we believe that the majority of customers actually prefer to transact online, and as has already been articulated, one of the reasons actually they end up on the phone is because the quality of the experience is just not there. It's not available. But actually, we have incredibly good conversion rate because we have very short funnel, and we have very little dropout. And our conversion rates are, even though we don't even have any phones, we have no ability to speak to the customer. We see that as a USP. We don't. We obviously do deal with relatively simple cases. So we're not, if a customer needs, a whole host of different cover with life insurance and IP and KIC and so forth, complex needs, that is not going to be a customer that we can serve well. But the vast majority of people actually have relatively simple needs. And those are the ones that, as I say, go through our process very, very quickly. And it sounds odd, but we actually really welcome more people, as it were, competition, some would describe it, coming up with similar sorts of user journeys as we have, because we think that's how, in the same way the aggregators didn't really take a grip until there were 3 or 4 of them at scale, that's when they took over the motor space. We believe that's a similar opportunity for the life space.
Okay, great. And Gary, just to sort of ask for your view as well, because what I was at a conference the other week, and what we were hearing about is that when people talk about digital disruptors in these very traditional sectors, everybody's focusing on the front end, but not in the way that the guys have been talking about, is putting the customer first, but more having something that's slick and graphic and funky and it looks good. But actually very few of them tend to make very much money, and profitability almost becomes secondary to what it looks like from a PR perspective or a marketing perspective. Can you think of any examples in other sectors where actually people have managed to kind of tick both sides of that box, I guess?
So The challenge at the moment is because it's a relatively new sector for in terms of purely online. What they're all trying to replicate is the models where they can see there is a high valuation with potential future revenue. If you take a look at what they're trying to model, they're all going back to the whole concept that once you get a number of regular users that do engage with you, that's where the valuation comes from, because the products and the saleable items will come later. So it all goes back to the Facebook model. And then, that's exactly how Revolut and Monzo, how they're valued, because they don't make money. They're losing a lot of money, and they're seeing all the opportunity for add-on services down the line. And if you think about the way that the travel industry went, where they were the aggregators, after a period of time started owning the customer. And that's where one of the question marks for me is, where might that go towards? Because they've effectively owned the customer and then resell to them many times with different solutions behind it. You start to think, okay, well, how far down will other sectors go with journeys like that, where there's almost a value in having a trusted relationship that people use again and again. And to come back to Mark's point, where the services behind it have to figure out different ways to differentiate. And so I think and that's where the data play, and the way that you can personalize the products as you sell them through and try and upskill your brand to be seen as a valued brand to the end user, while still going through the aggregator channel, because it's still that's a known channel that is very valuable to this industry. But there's always going to be that striking a balance between where they try and take ownership of the customer down the line. I don't know whether you saw recently in the travel industry where Ryanair pushed out that anyone who booked through certain aggregators had to pay an extra fee, because they weren't getting all the details through of the customers. They were only getting subsets of it, which you can see how the different parts of the value chain are all trying to own that customer relationship. And that's an area for me that I wonder how long before somebody tries to do that in this space as an aggregator without passing anything on.
And do you think, just on that, Mark, do you think that that would be an opportunity for someone like, if it was an insurtech startup that had a very, very niche solution, to almost just pick up part of that process?
Broadly speaking, I think insurtech generally, I'm generalizing, they do tend to step in at various steps in the value chain. They don't tend to take the whole value chain on themselves. It's really difficult for an insurtech to take on the book because they don't have the capacity and the finances to back it. So they, more often than not, they need a partner to do it with.
Well, that's what I'm thinking. And also, because like you say, because the large insurance companies have these big legacy systems, and that, there's so much history for them to overhaul their processes.
Absolutely.
Is such a huge task, almost like bringing people in at points in that journey.
Absolutely. I think that's predominantly, that's how I see insurtech, to use that label, as accelerators for the right step in the value chain.
Mm-hmm. Great. Phil, James, anything to add there?
Yeah, I think that's exactly where we're headed. We're headed towards being the insurtech as the broker, and to Mark's point earlier, the insurers will sit behind that, and the challenge for them is to give the customer reason to engage with them through us. So, fine, if they want to do it just on price, then customers are adept at doing that. But if there's something deeper beyond that they can add, then we can present that to the customer in a variety of ways.
I'm just quite interested, because I know you recently appointed a chief digital officer, and I know you haven't had that role before. Is that to reflect what's going on in the industry, or is that more about where your own business is headed because of moving from telephone to digital?
Yeah, it's absolutely both. Yeah, we see it happening in the industry, and from ReAssure's perspective, we've spent a decade or more growing to become the largest broker in the sector. We've now served over 1 million new life insurance customers. So we're rich in data, and we recognise that there's a massive opportunity, as we've all been discussing, to really improve the initial application purchase process as well. So James has been brought in to look at both ends of it, really. Is how do we get more customers transacting online? Because I agree with Phil that absolutely more customers must want to do that. They just can't. And how do we carry on speaking to them in a meaningful, engaging way after we've sold to them as well?
Mm-hmm. I was speaking to another broker recently, and he was saying that when in moving to a purely digital process, because you need more questions to ultimately get to the right answers, as opposed to a 10-minute conversation sitting in front of a human being, you might pick up a little bit more because you're having a more in-depth chat. Do you think that there are limitations to being purely digital? If I go to Phil Zeidler, where do you think those limitations might sit in the future?
That's certainly not something we've experienced so far. I mean, I think our digital process is shorter than any conversation and anyone can deliver at all. That's more about your approach to what information you need, how valuable it is, product construct. I think it's an interesting, just to come back on the point Mark made, I think I'm not so sure that InsurTech is going to sit or in purely in partnership with the traditional insurers. I think in the likes of Lemonade and so forth, you will find that actually insurers are going to have to move and change their spots and become InsurTechs. Soon InsurTech isn't going to be a thing; it's just insurance. It just will be technical, and actually, I think that there will be some that don't ever catch up because we see, we just think about data and approach to data, traditional forms of data and traditional forms of actuarial underwriting, looking through the rearview mirror, taking large sets of data and standardizing it is obviously not where insurance has been for some time. And I think, there are certainly sectors like telematics and the motor which have demonstrated that. But we see that's coming in life, very much so. And InsurTechs, it's really just a phrase to say someone that doesn't have a legacy platform that can move fast. So I think it will be really interesting to see who the winners and losers are over the next 10 years. But I think insurance companies that don't change their spots are going to be left behind.
Thank you. And Mark, just a point on the data piece that you were talking about earlier, and in being able to determine risk much more accurately, where do we see that going with pricing, and are there any concerns in that happening?
If we can get access to people's data, and we're allowed to get access to people's data, and we're allowed to use the data in a way that we'd like to, it would make some of the things that the pain in some of the processes we talked about earlier much easier. So the application process, if I own my health data and I share my health data with you, and we don't have to fill in reams of forms, that would make the process a lot easier, make it more relevant. It would allow there to be times for interventions during that process. The trick will be there's lots of reasons why the insurer would want that data. I'm not convinced they know what to do with all that data at the moment. But the real trick will be, what's the value exchange? Because the customer may well have that data, but why would they share it? And it's a bit like the black box in a car. I mean, originally nobody wanted their driving monitored because they all thought the insurer was going to beat them around the head with it. Now, it's turned out that it hasn't worked out that way, but it's taken quite a while for that proposition to evolve into, to where people see the value in it today. So I think it's there. I think it's technology could handle it. We'd need to work out our pricing mechanisms. We'd have to have some confidence in those mechanisms, and we'd have to be allowed to do what we want with the data. So the regulator does play a bit of a part in this.
And I think that there'd need to be some, the industry needs to work out where its lines in the sand are, really, because the Vitality model is probably the most advanced in the life insurance sector when it comes to that kind of step towards dynamic pricing, but it's very much all carrot and no stick. So if you do the right things, you can see your premium decrease, or you can see some discounts here and there. If we can see you're doing the wrong things, so you started out as a non-smoker and now you're on 20 a day, or you started out drinking 2 units a week and now it's 20, there's no stick. So to Mark's point, the black box analogy is one I like very much, and I'll absolutely steal, Mark. So thank you for that, because it's absolutely right. If now I can see, well, actually, if I stick one of those in my car, my premiums will go down because I'm broadly a good driver, I'm on board. But if I'm worried that you're going to see that I've gone a bit too fast around one corner and that puts my premium up, then no thanks.
Okay. Gents, I've just seen the time. I just want to ask Gary Partington, just from what you've heard today, if you had any closing message for anybody, or if you've got anything that surprised you along the way.
I think there's some real opportunities to look at how data and transformation can definitely help insurance businesses going forward. I think from what we've seen, it is that next step on the journey for industries. I think I'd be really interested to think about how, because mentioning the data, how do you know how good that data is probably going to be one of the challenges going forward when people realize how they can try and work around some of these things. Because a lot of the data can be faked, so there's going to have to be safeguards around some of that. But I do think, agree with all of you there, that the opportunities are there to be taken advantage of as things move forward. And it's how best to take some of those to put them into something that can be then used as a saleable product, and hopefully keep, maintain, and grow the customer bases. Because it is going to be I think in the next 5 years, it is going to be one of those interesting areas where, does insurance as a service take off, and it becomes, in some ways, hopefully not a fight to the bottom. And otherwise, how do you differentiate? So there are going to be some very interesting, I think some of the new insurtech startups that come in will all have these ideas following on from some of the other sectors. Airbnb that owns no bedrooms, and Uber that owns no cabs, through to an insurance company that doesn't have a book. Where will that be? All those things as we go forward. Let's just see where you can try and keep the relationship with the consumer.
Great. Okay. Thank you all for your time. It's been really, really nice to talk to you. I hope you've enjoyed the session.